Hey everyone, and welcome back to the AI Tech channel. Today, we're diving headfirst into a market that's doing anything but staying calm. Forget the rebound. We're talking about a potential meltdown. President Trump's new tariffs are sending shockwaves through the stock market and Bitcoin. Well, let's just say it's not having a good day. Are we looking at a short-term blip or the start of something much, much bigger? Stick around, because we're breaking it all down. Let's get straight to the facts. Last Friday, we saw the Dow close at a record high. The S&P 500 finished its fifth straight day higher, and the Nasdaq also joined the party with weekly gains. Bitcoin was nudging closer to that elusive $100,000 mark, riding high on post-election optimism. Fast forward to today, and the picture is drastically different. Stocks closed lower across the board. Tesla took a major hit, Nvidia's slump continues, and Bitcoin is feeling the pain. But why the sudden reversal? That's what we're here to unpack. The elephant in the room is, without a doubt, President Trump's tariffs. These aren't just numbers on paper. They're a wrecking ball to the global economy. Think of it like this. Tariffs are taxes on imported goods. They make those goods more expensive for American businesses and consumers. This can lead to higher prices, lower demand, and ultimately, slower economic growth. It's a classic example of supply-side economics gone wrong, potentially triggering a stagflationary environment. And the impact isn't limited to just the U.S. Retaliatory tariffs from other countries can spark a full-blown trade war, disrupting global supply chains and hurting businesses worldwide. This is where the concept of comparative advantage is thrown out of the window, leading to inefficient allocation of resources. A paper published in the Journal of International Economics showed that tariffs disproportionately harm consumers through increased prices and reduced product variety. This is real-world impact, folks. We're talking about your wallets. Tesla's situation is particularly interesting. On one hand, Elon Musk has a close relationship with President Trump, which could be beneficial. But on the other hand, Tesla relies heavily on global supply chains and has significant exposure to the Chinese market. These tariffs create a perfect storm of uncertainty for the company. Remember, Tesla vehicles, while assembled in the U.S., contain parts from Canada and Mexico. Higher tariffs mean higher costs, which could squeeze Tesla's profit margins and make its cars less competitive. Plus, the possibility of retaliatory tariffs from China is a major threat, given Tesla's gigafactory in Shanghai. It's a high-stakes game of political chess, and Tesla is right in the middle. Nvidia's woes are a double whammy. First, there's the overall market anxiety caused by the tariffs. But more specifically, there's the rising competition in the AI chip market. The emergence of DeepSeek, a Chinese startup with a low-cost AI model, has shaken investor confidence in Nvidia's dominance. The fear is that big tech companies might start shifting away from Nvidia's expensive chips towards cheaper alternatives. Now, add the tariffs into the mix. If China retaliates with tariffs on American AI chips, Nvidia's sales could take a significant hit. This is a crucial juncture for Nvidia. They need to prove that their technology is worth the premium and that they can maintain their competitive edge in a rapidly evolving market. Otherwise, we might see a major correction in Nvidia's stock price. And then there's Bitcoin. The cryptocurrency had been on a tear, fueled by post-election optimism and the belief that the Trump administration would be crypto-friendly. But the tariffs have changed the narrative. Increased economic uncertainty and a stronger U.S. dollar tend to be bad news for Bitcoin. Why? Because Bitcoin is often seen as a hedge against economic instability and a safe haven asset. But when the dollar strengthens, it becomes more attractive to investors, reducing the demand for Bitcoin. Plus, a global trade war could lead to increased regulation and scrutiny of cryptocurrencies, further dampening investor enthusiasm. We're seeing a classic example of fear, uncertainty, and doubt, or FUD, gripping the crypto market. Now, let's get to the crucial question. What's going to happen next? We have two camps here. The bulls argue that this is a temporary pullback, a buying opportunity. They believe that the market will eventually adjust to the tariffs, and that the long-term economic outlook remains positive. They point to strong corporate earnings and low unemployment as reasons to be optimistic. The bears, on the other hand, are warning of a deeper correction. They believe that the tariffs will trigger a recession and that the stock market is overvalued and due for a major crash. They point to rising inflation, increasing debt levels, and geopolitical risks as reasons to be cautious. So who's right? Well, that's the million-dollar question. But here's a strategy. Follow the smart money. Look at institutional investors, hedge funds, and other sophisticated players. Are they buying the dip, or are they selling off their positions? Their actions can give you a valuable clue about the market's future direction. You can track institutional ownership changes through SEC filings and various financial data providers. This is where the real insights are hidden. Amidst all the doom and gloom, there's a potential glimmer of hope. Alphabet, Google's parent company, is betting big on AI. Despite concerns about competition from Chinese startups like DeepSeek, analysts are mostly bullish on Alphabet stock. They believe that the company's fundamentals are improving and that there's growing demand for Google Cloud. The key here is Alphabet's ability to innovate and stay ahead of the curve in the AI race. If they can successfully develop and commercialize cutting-edge AI technologies, they could weather the storm and emerge even stronger. This is a high-risk, high-reward scenario, but it's one that could potentially offset some of the negative impacts of the tariffs. So what's the bottom line? President Trump's tariffs have injected a massive dose of uncertainty into the market. Stocks are reeling, Bitcoin is plummeting, and the future is looking increasingly unclear. Whether this is a short-term blip or the start of a deeper crisis remains to be seen. But one thing is certain, volatility is here to stay. Now, I want to hear from you. What do you think about the tariffs? Are you bullish or bearish on the market? Let me know in the comments below. And don't forget to like and subscribe for more in-depth analysis and market updates. Thanks for watching, and I'll see you in the next video.